Financial Argument. Follow us on YouTube.
Now, we've been hearing about the Brexit for almost 2 years now, and we know that nothing is done. Yes, there was a referendum, but it looks like it's finally going to happen. Now, they're expecting to invoke Article 50 and trigger it on March 29th. Now, we're going to have to wait to see if they actually go ahead and do this, but it looks like this is the date they're going to move this forward. This is the date where they're going to separate themselves, the UK, from the EU. And again, once this occurs, we're going to see other countries out there saying, you know something, it is time for us to leave. Now, the central bank, of course, they're going to try to do whatever they possibly can to keep all these nations together. They do not want the nations to leave. This is why they said, listen, if you want to leave, you have to pay up your debt. They're trying to scare the nations into staying. So we will look to see what happens. We'll look at this on March 29th, which is in 9 days, and we can see that is coming up very quickly. And if this does happen, you're going to see other countries follow. Now, here in the United States, we see things rapidly falling apart. Now, each time we talk about different economic sectors, we can see that they're deteriorating, declining, and we're moving back into the situation we were in 2008. Now, when we look at the retail stocks, they are broadly lower, with about 83 of 91 components of the S&P 1500 retail index trading. They're in the red. So when we look at different stores and we look at what's going on here, we see things are rapidly deteriorating very, very quickly. Wells Fargo states it's increasingly clear that retail is under significant pressure, adding that store traffic remains weak, and it's likely to get softer this week due to the Easter shift. So they're saying that traffic is drying up, and Easter is not going to help. Actually, it's going to become even worse as we move forward throughout this year, because we see more and more individuals losing their jobs. We see retail stores contracting, closing, laying off individuals. And retail right now, they're running out of time to reach the elevated Q1 numbers. They're just not going to make it this year. And Wells Fargo, well, their retail team conducted channel checks. And you know what they found? They found that traffic declined 13.3% month on month and negative 2.4% year on year. Traffic is continually declining. We see many stores out there saying that, listen, their sales estimates, they're a complete miss. Revenue is down. Movado is reporting fourth quarter sales. Well, they missed estimates completely. And we're seeing other stores saying, listen, we're just going to have to close down our retail chain here. We can't survive anymore. We're going to have to let these people go. So when we're looking at the whole entire situation, and things are dramatically getting worse as we move forward here. Now, a couple of reports ago, we talked about bank loan creation and how that was declining. Well, we have the latest update to the Fed's latest weekly commercial bank loan data, and it looks like things have deteriorated substantially. Total loans and leases grew only 4.2% in the week ended March 8th, the lowest growth rate since May of 2014. However, it was once again the commercial and industrial loan creations, or lack thereof, which was more problematic, because after growing 4% on a year-over-year basis as of March 1st and 5.7% 1 month ago as of February 8th, the growth rate has since tumbled to just 2.9%, a 1.1% decline in growth rate over the past week. This was the biggest monthly slowdown going back to the financial crisis. So when we look at this, the whole thing does not look good whatsoever. It appears the inflection point can hit within the next few weeks, not the next few months. And it looks like we're going to be running into huge problems here. Big problems. Deutsche Bank right now, well, they're saying after raising capital at 35% discount over the weekend, Deutsche Bank shares are tumbling once again back into the red for the 2017 year. CEO John Cryan warned that revenue would be broadly flat throughout 2017, which means it's going to drop even further. And things are going to get even worse as we move forward. We see that the banks throughout Europe, they are struggling. If the ECB right now scales back stimulus, banks face even greater risk of collapse. But they're coming up with a solution, like they always do. And when I say they, I'm talking about the central bankers. Because it looks like the ECB, the Bank of Japan, the Fed, they're scaling back on QE right now to bring down the entire system. Now remember, they have these stress tests on the banks telling us that the banks are strong, only this bank failed. But when we look at the entire situation, European banks, they are in a whole lot of trouble right now. Now, events are moving very fast in Europe. It's almost impossible to keep up, but the total stock of non-performing loans, NPL, in the EU is estimated over 1 trillion euros, or 5.4% of total loans, a ratio 3 times higher than in other major regions of the world. Now, on a country-by-country basis, well, things look even scarier. Currently, 10 out of the 28 EU countries have an NPL ratio above 10%. And among Eurozone countries where the ECB's monetary policies have a direct impact, there are these NPL countries that are pretty darn bad. Ireland, 15.8%. Italy, 16.6%. Portugal, 19.2%. Slovenia, 19.7%. Greece, 46.6%. Cyprus, 49%. In Greece and Cyprus, two of the Eurozone's most bailed out economies, virtually half of all the bank loans, they're completely toxic. This is a terrible situation. Now, the ECB vice president called for the creation of a whole new class of government-backed bad banks to help buy some of the 1 trillion euro of bad loans. So basically what they're going to do is they're going to do a Euro TARP, and they're going to buy up all the bad debt, just like they did here in the United States. And who has to flip the bill here? The taxpayers once again. This is what they're going to use to bail out these banks once again. They're going to use taxpayer money. So we can see at this point, the banks, they're doomed. The ECB, well, they're scaling back. And every time they scale back and they don't pump up the banks, we see what they're truly like, what is really going on. And these banks are in a whole lot of trouble. Now, they haven't been given the green light right now, because the scheme, if it does get the green light, it would pave the way to the biggest one-off bailout of European bank history. I mean, this would be unbelievable. And we'll have to see how this goes, because if they don't get the bailout, well, it looks like the system's going to come down even faster. Now, looking at what Trump wants to do here, where he wants to bring back manufacturing jobs, he wants to bring back the employees back to the United States, make America great again. To do all of this, to have the United States as a manufacturing powerhouse, he's going to have to basically collapse the dollar. He's going to have to make it very weak, which will set off additional currency wars, trade wars. And we could see right now, if he really wants to do that, for the United States to be competitive, he's going to have to really devalue the dollar. And he's going to have to make it weak against other currencies. And other currencies are then going to bring down their currency value. And it will be a fight. But when you look at this, and if this is exactly what he's going to do, it's going to be very good for gold. And gold will then move up, because the value of the dollar is going down. Now, will they try to manipulate it? Of course they will. But other countries and other places around the world, they might attach premiums to it. And then eventually what's going to happen, as the dollar continually gets weaker and weaker and weaker, gold is going to break out. And we could see that if he truly wants to do this, this is the path he's going to have to take. Now, so far, nothing has been done. No manufacturing plants have been built. No manufacturing jobs have been brought back. All that offshoring has not stopped at all. We're seeing a lot of retail. We're still seeing companies laying off. That has not stopped at all. We're seeing a lot of banks, they're ready to go under. And we have this debt ceiling where no one in government, no one on the corporate media, they're not even mentioning it. It's like it doesn't even exist. But we know when the government starts running out of money, and according to David Stockman, we're not even going to make it to Memorial Day. That's when we're going to see everyone come out and start talking about this. This is when we're going to see arguments on both sides. And this is when things are going to get ugly. So if we get into May, and they haven't made a decision yet, and we get close to Memorial Day, again, this is another sign that you need to ramp up your preps here. Because if they're just going to take the debt ceiling and raise it, which doesn't mean this solves the problem, it's going to be temporary. We're going to revisit this issue once again. They're just kicking the can down the street. Now, Trump can play this two ways. He can say, you know what? We're not raising the debt ceiling. He's going to bring down the economy, reduce the value of the dollar, and let the economy completely collapse. Let the country default on its debt, which means countries around the world, well, they're going to look at the situation and say, we don't want dollars anymore. They've just defaulted on their debt. The system will collapse. If the debt ceiling is raised, that means the central bank is going to continually raise rates to bring down the economy. So right now I'm looking at this and I'm seeing a battle between two forces right now. But the interesting thing about all of this is that the outcome is exactly the same. It just depends on when and how. But the outcome is a complete collapse of the system, one way or another. And when the system collapses, countries around the world, well, they're not going to keep the dollar anymore. They're going to send the dollar back to the United States. They're going to get it out of their reserve currency. They're going to sell off their treasuries. And they're going to do it as quickly as they possibly can because they don't want to hold on to it, which means we're going to see inflation. So whatever scenario we're looking at right now, we're headed to the same exact direction. So if we're looking at point A, which is Trump, point B, we're going to head to the center to point C, and we're going to have this collapse. So you need to get prepared one way or another, because either situation, things are going to get very crazy, chaotic, horrific, because the whole system's going to have to be reset, just like a corporation, where it goes bankrupt, all debts are wiped out, no one has faith in the dollar anymore, inflation starts, they have to create a whole new currency system, maybe have it redeemable or backed by gold, depending on how they do this. Maybe they have two currencies, an international currency and a domestic currency, which will be devalued quite a bit.